Hi Doomslayers, this is a stream for Patreon members. It may go live later, but it's very much for Patreon members now. Thanks so much for being a supporter. Let's get into the charts. That is GME, and we're looking at 25 spot 52. Similar picture with the open interest as we've seen recently, with the MaxPain still at 29. We're significantly below that. Call open interest, high strike 35. That'd be resistance. Should we even go to the top side significantly, that would be where you'd expect resistance, and put open interest strike, that's where we expect support at this stage of the trend based on the current open interest picture and prices side of that line, right, which is very close now to the $25 level, which brings us onto the charts and the idea that this trend, which has been quite extended, we've seen it go on for a long time, may eventually turn around, at which point you'd be looking for exhaustion on that trend. And how would you judge that? And how do you trade reversals? Now, I've got a way of doing this that I talk about on a video on my YouTube channel called How to Trade Reversals, and it includes a touch on patterns and formations, which is really useful. And if you combine that with other technical analysis that's with regards to, that video talks about with momentum, then you're really on a good thing with your trading strategy. These are like the right things to be looking at. One indicator that can also be used along with it is the TD Sequential by Tom DeMark, and I'll add more information about this to the course or to the course rooms or to some homework tasks just to provide extra value for people there. But to touch on it here briefly for you Patreon supporters, you're looking for it really to get a 9 count. You get consecutive candles. It's called a sequence because they have to come in a row and they have to finish consecutively higher or lower if it's a bullish or bearish trend than the previous. And they also want to maintain that extremity to be beyond the candle 4 closes beforehand. So 4 before the one you're currently looking at, you want to be closing again and a continuation of that previous trend further to that extreme. So that's what you do it, and you get 9 of them in a row. At that point, you're potentially looking for reversal or exhaustion in the trend, and you can potentially take a trade. So you're looking for number 9, and just to show you, here's number 9 price action at this stage. Prints support and resistance levels on that 9, and if price action is there or thereabouts and moves in the opposite direction of the prior trend, that's when you're potentially getting a good trend. If that fails, you'll also see that it gives you an opportunity to go the other direction, which you got here, extension after that 9 as the percentage move. And we talked about this at the time, all matched with our TA and everything, but if you talk about it here, that's 13%, and you'll commonly get between 10 and 15% moves using this indicator on the 4-hour daily or 2-day time frame. Typically you'd look at it on the 4-hour daily as well. Then you can get 10 to 15% moves if it conforms to the rules with which I use it. So like 9 on the candle 9, which conforms to those rules I said before, consecutively more extreme closes in line with the trend. Also, that every candle closing further than the 4 previous than that closed 4 periods previous to it, not all of them, just that 4th one, and consecutively doing that every time. So the 9th one always has to be like the 9th one will be closing higher than the 5th one, and the 8th one will be closing higher than the 4th one, and the 7th will be closing higher than the 3rd one, right? So that's the way it works, and one will only start when price action changes direction from a previous trend, and then the 1 will be printed when you're, say it was going up, then the 1 will only be printed when you're closing lower than the low 4 previously, even though that'll have been in a previous part of the trend, right? It flips, and then you're getting the 4th, and that's 1, and then it goes 2, 3, 4, 5, 6, and when you get 9 of them, then that's a really extreme trend. It's usually exhausted, and you can look to turnarounds and moves like you've got here. That's on the 9, just as a quick example to show you. This is just looking at GME. You can do this anywhere, and the reason I'm doing it will become clear in a minute. You got your 9 here, you were above the resistance, tried it below it once, and there's stages to this TD sequential. Stage 1 that goes to 9, there's stage 2 that goes to 13. That's slightly different. It's very different, and certainly pay attention to those other ideas about the resources on the course and whatnot, where I'm going to explain it in more detail and talk about how you can use it there. In the second stage, will typically give you bigger moves that are more robust, more reliable to trade, and last longer with much bigger percentage gains. So with higher risk reward ratios too, and much easier to trade. You don't get them as frequently, but there's rules to the second stage that are different from the first stage. In the first stage, it's 1 to 9, it's closing higher than your 4 previous. Second stage, it's then the 9, that candle turns into a 1, and you're looking for it to go to 13. There's different rules between them, but anyway, it's where 9 you see a lot of action. Here, 9 losing that resistance point. This was the subsequent 9, same trend on the way down. You know, you were also getting them, you know, consecutive trending moves at that stage, so it was quite easy to see the failure. You had a 9 here, turn around, held support, so at this point you got a reversal at that stage. Just on this little move there, it was 7%. At that stage you lost your resistance. Back again, you're breaking through these two levels. The 9 prints, when you drop these support and resistance in, also leads to opportunities. Here you got a really strong trending move. You know, and if just using this alone from the open, once it broke that resistance, that was 33%. You know, pretty good there. So you got 4. This was only 4, so it held the support level as well. So it's not just the trading it in that one particular strategy and setup that I'm explaining there. It's also that it gives you loads of other indications that you might, you know, look to these levels. And here we had a 9 print that dropped in this level of support and or resistance. At this stage you approached it from above, held it, and then moved to the top side. You know, you're getting lots with that. You went beyond this level. If you talk about that at this stage, you're like, how far into the trend are we? Not really, actually. It starts reversing, turns off, you know, 1 2 3 4 behind, you're closing below that, it ends flipping the other direction while you hold support. That's good to see. You know, it doesn't necessarily give you the 9, but gives you, you know, and then we go through it, you do see that quite commonly, here's another 9, gives you the candle signal. If you manage to break through resistance, you do have something. There's a 200 period moving average or below it. You know, there's loads of other qualifications that we've talked about in the TA so far that you can put on top of it, make it even better. Like here's a 9, you went through your resistance at this stage, got, you know, so talking about the second stage and on to 13 at this stage, but commonly at the 9 you'll get so very many opportunities. And also if you build in the support and resistance that this thing gives you, it does also provide extra context to your trades. And the reason we're talking about it rather than looking for constant examples here is because GME has been in an extensive downtrend. As you can see, 27.17 flash on the 4-hour time frame there. Rocky Outcrops indicator. You also know where to get that at www.patreon.com/rockyoutcrop. Now, indicators here. So, the point I'm trying to make here is GME's been in a long trend now to the downside. That trend has been quite linear, and it has come with so very many opportunities for it to turn around where it hasn't done so, and so that the momentum within that trend is what sustained it to this stage, and eventually it will become exhausted. The bears that were opening positions, we've already identified from the open interest that they're incentivized to close towards the end of the week. That's approaching now. And so does that also come in line with support and resistance on our charts? Does it look like this indicator provides us with extra context? On the 4-hour time frame, you see you've only got a 5 there. You've broken through your resistance, and that's not particularly helpful. Daily time frame, a 3. You've been rejected at this top side. You know, that was definitely resistance there at $29, $30. All of this below the 200 period moving average. Not super fantastic. Looking left, you can see previous levels of support significantly down there. In our levels 1950 that we're talking about. So these are all, it confirms with the other TA that we're talking about that this trend hasn't yet necessarily finished. 2-day time frame. Now you've got a lot of other interesting things here. The 2-day time frame is where I'd advise you put a lot of attention here. On the 9, you know, this candle still conforms to the trend despite the fact that it's so very much going in the opposite direction from all these candles, because, you know, the close 1 2 3 4 previous back up here, you managed to close lower than it, so this previous trend still intact. At this stage you're looking for your move 1 2 3 with your stop loss being presented on the extremes, either high or low depending on the direction of your trade, from the candle 9. At this stage you were also below the support and resistance level here. You'll be aiming for down at 26, knowing that that trade was on below 28, your stop loss but back in around above 30. You know, that's not how you're not going to be trade short in GME. I'm talking about how you use the indicator. And if you've got positions that are, say for example, you've got an options trade on GME and you're wondering, you know, say it's in profit and you're wondering, you know, January, February, these are the strikes, or March, you know, you're looking at these things and you're like, this trend's like quite extreme and low. Does it look like it's going to continue? You know, or you've got some other trade open that you're looking at, you know, whatever type of instrument you're using, and it's subject to time decay. Maybe these sort of things are useful for you because these sort of indicators are all about timing. These are about timing. And so that's the way in the nature of the look back period on the candles, 1, 2, 3, 4 back, or the second stage slightly different. But this is how this indicator can provide context to you. Even looking at how it presents bearish scenarios, if you're long, you have to try and disprove your own thesis. Like that's the best way to overcome any inherent bias. Also, it's the proper route to the scientific method. To what you're trying to do here is provide real value to yourself. Then you don't want to be inhibited by your own opinions, and it can be that this will provide you with some context if you use it from the other side of the trade's perspective and you're looking at this. How will they feel? Especially if they're looking at it thinking, if things going to turn around, you're looking at it thinking, are things going to continue? It can inform your own trade and your own setup. So if we look at it here, you exceeded your previous low. That's not great. You're putting in a 1. So this previous idea of 1, 2, 3, 4, these all themselves clearly higher than their 4 before. So the bullish trend looked like it's going here. That broke. And so you can add context to your idea of like, are we in an uptrend? Well, price actually broke down here below the support and resistance level this indicator marks out. And we've like defeated the idea of this providing a bullish setup for us. So the trend so far continues, and you'd be looking at these previous lows if we want close to them in a minute. One candle so far being presented that's 1, 2, 3, 4 lower than the 4 previous, and now you're looking for it to build to 1, 2, 3, 4, 5, 7, 8, 9. If that does continue in the same fashion that you got it here, it could be very, very low prices. I would expect it to at least come back and test these previous areas around 23 and 20, obviously. All of this through the 200 period moving average on today. Right, on the daily time frame then, 1, 2, 3. You had a little bit of an interruption there, and if it is interrupted, then it resets on stage 1. And so you're looking left here, and you can see also you had the 1, 2, 3, 4, 7, 8, 9. You had the potential reversal. It failed below support and resistance, and then you got 10. Like this is your 1, 2, 3, 4, 5, 6, 7, 8. Interrupted at this stage, but it's looking for continuation of this formation. You went back below the resistance, so you reset it. But you were nearly on for stage 2, and you haven't completely wiped it out because none of these body closes were above. Stage 2, not particularly friendly there, suggests. So what we're talking about here is whether or not the trend is exhausted, looking for reversals and trying to anticipate when they're coming, because how else do you manage these situations when you're looking to the top side and the trend has been continually to the downside here? Well, this is also a divergent high. It came with a swing failure, and you got your signal on the second stage of this. Price action then lost support levels here. It put in resistance. You started a new trend in the 1, and on the 9 you continued it on again. On this 9 you turned around once, managed to hold support here. This situation failed, continued a new trend down again as you lost resistance, quite dramatic. So support, and at this stage it would be this would be like where people would have been looking, and it would have been suggesting short sales at that stage. It would have been also suggesting closing open interest, like closing contracts if you thought they were expiring. You were going to be subject to, if you want profit protection, that would be a potential strategy. So these are ways of looking at price action and combining like time with the technical analysis. But you'd have to be doing it for a purpose other than simply your own musings, because it's about this is about providing real practical utility, not about as we all like to do, the musings about price action or where we think it's going to go. Anyway, we'll get into more about how you use this indicator in different formats and different fashions, but there's a brief introduction to it, and turn it off at the minute, close that over, and start back on the daily time frame. Quick then summary of the GME price action for today. So far you're down 5%, continuation of that trend that we spoke about. Also, you're below the 200 period moving average. It has a negative slope. Price action below it, not great. We're also below the RSI center line. That's terrible. We're approaching the bearish control zone with no obvious sign of bouncing yet. And the MACD is giving us confirmation of a previous sell signal, which we got a hint that was very much dodgy when we got rejected from this approach towards the 200 period moving average again. So we can see here then, if I turn the drawings back on, a number of different things become relevant. The 236 from our lows, March 2020, these same figures we're talking about, the same dates we were talking about in yesterday's video. Definitely check out yesterday's video if you haven't seen it yet. I'm aware it's had 150 impressions since it was out 18 hours ago. 150 impressions is all YouTube's managed to give it across our entire platform, despite the fact that I've got 22,000 subscribers. So you'll see on Twitter I've linked the stats where it shows that after 13 hours it only had 45 impressions or so. despite having a massive watch time and a massive click-through rate. So I need real, like, I'm fighting against the tide here with YouTube. And I also, you'll see the stats on whatever, more randomly, right? More people are randomly typing some search term about GameStop into a Google search result and somehow being landing on my video. A higher percentage of people arrive from that ridiculous, absurd route than actually find me on YouTube. And it's a YouTube video. Amazing, right? 45% of the people who watched that video came from a Twitter link. Amazing, amazing, right? So you absolutely need to have this isn't me yapping, right? This is a fact. Now, you need to have the bell turned on. You need to have YouTube notifications set up to be sent to you from this channel. You need to have them set up on your phone, on the mobile app for YouTube as well, independently. And you need to have then on your actual device allow notifications to come through. And that's just YouTube normally, if they are even going to tell you about me. So, but the best way is obviously down Discord, get the notifications all the time when it goes in there. So annoying. Anyway, I really need your help for you to find my videos because no one's serving them the way they should. And so we've got our picture here of what's going on in price action since March 2020. Watch that video. It's really good. Like, it's really good. Put effort into making sure that you would understand what's going on across the markets and all this anyway, right? It's really handy about GME. So you've got, since that move to the top side, you've then got this Fibonacci retracement, measures the strength and moves back down again. We've lost the 236. You're aiming for the 382 at that stage. That's at $16, right? That's where it is. That's also confluent with the 236 of a Fibonacci that measured from that ultimate high in January 2021 down to the low that we all call, what we called here, Tradespotting at around $10, which at the time was 35, right? In around these levels, that gives us a retracement, you know, back against that low towards this high. And now neither that previous low we spoke about in 2020 or the high in 2021 have been broken. So these are your two dominant fibs that you can use for price action going either direction. And this, we're in amble, and this gives us the 236 in the golden pocket, the 382, 50%, all of these useful levels on the left here, and along with this on the right. Now, these are the 236 in the golden pocket are marked down orange and green, right? This top side target, the top orange, that's the retracement back towards the top side. The bottom orange, that's the retracement down towards the bottom side. You'll notice I've put this beyond the 618 in at the golden pocket, reaching a full move down. If it goes down, I'm anticipating, why would I even bother thinking about stopping at 464? We would look at 394 if it brought, and horrific numbers, but I'm trying to illustrate a point as opposed to saying it's going there, and that point being, you know, prudence and managing your expectations and planning for the worst but hoping for the best. Right, so, you know, is then below us, now this green line, this below us, this is a 236 measuring that same Fibonacci back up again. This 236 here on this Fibonacci move up, that's the green line, it's ahead of meeting the orange one on the top side. So you've got various areas to go to, and this 382, right, which has provided support on our most recent low from the Fibonacci measuring retracement back up again. If we hold that, that's very good because we've managed to, you know, recover this 236 and not come back to it yet. We dropped below the 382 at this stage and then held it before our breakup, and that means that this is a very crucial level, and that crucial level is $23, right? 50 cents. It's really crucial level. So you want to hold that, and the 382, if it breaks, you'll be looking at the 236, right? So you break 23. The truth is, like I've been saying 19, I've been saying 21.50, and so on. And you know, there's no guarantee you will come down and test this 236. But in terms of that Fibonacci sequence, that's the level you're looking to, right? It just so happens, unfortunately, that that is confluent with the lower side of a downward sloping support line within a parallel channel, which price action has conformed to since back in June 2021. And that's like had a number of touches top side and bottom side, definitely confirmed, and that's rather unfortunate because Confluence then becomes magnetic for price action. See there around $16, and that's your 236 at this stage, right? And you can see, identify where these Fibonacci's are coming, if it was on the move to the top side or the downside, with these arrows over on the right here that show you the direction that it was being plotted from, right? So on each of the important lines. Here's your 382, as you can see, that's with this golden pocket. It's down, it's down. This is a 236. Yo, buddy, you're the same. Wait, look, this is a 382 pushing to the top side and a 236, so I'm missing one of these guys. For keep everything right, you know, so as you see, this level extra emphasis in that there's even more confluence in the 382 matches the 236, right? 50% retracement, also very close to the 236 on this side, and that comes in at around $35, where we already talked about we would find really significant resistance. So $35 topside, very, very weary of that level, and you don't necessarily aim for the gap, which you can see is marked in here at 37 and change, nor the downward sloping resistance. That would rely on a very bullish inflection, and at this point we're just talking about trying to arrest an increasingly alarming downtrend, and if that doesn't happen at those levels, you know, like, oh, it's increasingly alarming now. So there's the 200 period moving average. Also within this downward sloping channel, we do have a little bit of saving grace in that we're around about approximately, you know, it doesn't know exactly where it's drawn, but we're in about there. It would be a good zone. We're in at the basis line of this channel. We could very easily bounce from here, okay, very easily. If it doesn't, though, you know, and if we're only $2 away from, I know that 250 is more or less 10% now. Significant, right? Significant, no doubt. So what we're really looking for is that not to happen, but it probably does, and take the extra $2 as well. And if that stage it bounces, all well and good. Should we go back up again? If it doesn't, a little bit dangerous scenario down here, a little bit annoying really overall. We are the doomslayers for a reason. Right, there's the 236, there's the golden pocket, there's the 382, there's this tested from both levels. It's a basis line within the channel, there's golden pocket on the top side, downward sloping resistance approximately in at those levels. I'd say that things now, if we were to extrapolate this channel for a while, we could see that, you know, reaching this golden pocket, the 236 retracement here is not completely out of the question, in that it would be a continuation of this previous trend and would match up with a thing I'm about to draw in a minute that I can see is all dead obvious. And then this downward sloping resistance suggests that the top side is a little bit less realistic, conforming to this formation, should it be true and continuation present, which is what we would expect as traders. And that thing that I'm saying is a little bit obvious. You know, you're talking about these lows to these highs. You're talking about moving in at these areas, 1.13 extension. That's already very close to that, 1770, you know. Talking about really, you know, and then that was that low, which isn't even really technically as low as this guy over here. 1.13 extension at that stage coming in even closer there. So, you know, a lot of different things suggesting that if this trend isn't arrested and we're at the midpoint between here and there, so, right, you know, I'm aggressively optimistic. Let's say we bounce. If not, I would anticipate it coming to these areas, which would be the next buy point, and depending on when it happens, maybe a level order there. That's it for the GME stream. I had to do this one quickly because I have to run off and do other completely unrelated to YouTube stuff, but I appreciate you guys so much. You like, I cannot articulate it enough. I can't explain it in a way that will properly convey how appreciative I am of all of you making a big decision to support me and to get involved on Patreon. Thanks.